Do elections really affect the real estate market, especially here in Los Angeles County? It's a common question amongst buyers and sellers, especially when you're deciding whether to make a move during uncertain times. To answer this, we're going to look at the key metrics for the last 5 presidential elections from 2008 to 2024. We'll examine how median sales prices, days on market, and active listings performed between August, just before the elections, and January, after the transaction of power. Let's dive into the data and see if there is a notable impact on elections on the real estate trends. Let's look at the first graph. It's going to be the median sales price, and this is going to be for Los Angeles County. And to see what I selected, we have residential single family homes. We're going to be using this tool called InfoSpark. That's for realtors like myself, and that we pay into this in order to have this data to be able to share with you. So here we have the maximum amount of time going back to 2008 all the way to today. And when we look at the median sales price, we are going to be looking at August. The first one is going to be August 2008, which was the election cycle to that, which is $425,000 was the median sales price here in Los Angeles, believe it or not. And then we look at January, which is going to be $334,700. So it went down, and keep in mind that this is the time when there was a housing crash. So homes were going in short sale and foreclosure. So home prices were dropping at that time. Now, in order to make the rest go smoothly, I actually put together a graph of the different election cycles. So here we have 2008, 2009, which we just saw. Now is a percentage change of 21%, or price change of $90,000, which would have been a loss in revenue or loss in price value of the property. In 2012 to 2013, we see just about a 1% change negative. So it's $3,500 from August to January. In 2016 to 2017, we see a drop of about 2% or $13,500 from the median price. And in 2020 to 2021, we see about 1% change. We're in 2024. For $1 million, it was a median sales price. Now in January, it's to be determined, as today is October the 22nd of 2024. So we'll find out what it is. Now, when we look at the major factors of these, it's going to be definitely the housing crash here, 2021. We see a change from negative values to positive. We had the pandemic, and we saw influx of people purchasing homes. So we see some change in the positive spectrum, but overall, it seems like a typical trend for the winter season. Now let's look at the next one, which is going to be median days on market, just to show you on the graph how that looks. It's a downtrend. There's some spikes in it, but it's definitely a downtrend. And actually, if you follow the spikes, it's going to be seasonal as well. And let's look at the graph that I put together here. And we could see in 2008 to 2009, the days on market, it went down. And there's more people buying properties quicker, or homes dropping off the market. Remember in 2008, 2009, we had the housing crash. It was at the tail end of it. People were short selling, foreclosing. And it shows here how they were losing in price. In 2012, 2013, there was not much of a difference. Same with 2016, 2017. Now you can see here on 2020 and 2021, it's a 20% difference, but it's only 2 days. So remember, here we're looking at the days on market. You could see that the trend is that homes have been selling faster year over year. And when we look at 2024, yeah, it's gone up 5 days, but 15 days to sell a home is still a seller's market. It's a significant seller's market. So that's huge. We haven't seen much of a difference. We're going to get to the active listings, and it's going to give us a better story of what's going on. So when we look at active listings, we could see year over year in this trend from 2008 when we had that influx. The inventory just drops and drops and drops and drops. Look how dramatic. Here in 2024 at the end, we're about 10K, and in 2008 we're 40K, so 4 times more homes on the market for sale in 2008 than there are today. That's what I want you to take from this story on the active listings. So there's definitely less properties on the market for sale. We could see it spiking up a little bit, but it's still, in the low 10,000. Let's go look at the graph, this chart. So here we have the years, and here we have the August, January, the change in listings and percentage change. We could see that in 2008, 2009, we had about 40,000, and it started to drop to 31,000, which is a significant amount of properties that they dropped from the homes, about 8,000. And 2012 to 2013, we saw another drop, about 27. 2016 to 2017, we saw another significant drop of 3,800. 2020 to 2021, we saw another significant drop of 2,500. And we're left right now in 2024 in August at 9,339. Remember, we're going back to just the change in listings. It's 8,000 in 2008 to 2009. It's almost the same amount of homes that are active on the market today. When you see that these homes are going up in price, just think about the inventory and what the inventory has to say about all of this. So what we have found in this data is that the elections really don't make much of an impact, if any at all, on the homes that are selling. What's more important is how much inventory is out there for sale. Other issues would be, as we had the housing crash and we had the pandemics, which made people want to buy more property. So those are going to be the more significant factors that we need to focus on. My name is Buitron. I'm a realtor here in Los Angeles County, and I service the San Gabriel Valley as well. I hope you found this video very informational, and if you need any help in selling or buying, I would love to help you. Even if you're just looking for more information on the real estate market, just make sure to send me a message. Make sure to like and subscribe, and I'll see you on the next video. Take care.